Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian bonds fall, extending the selling pressure seen in treasuries after a sale of 10-year notes was met with tepid demand. China's exports returned to growth in April, while the yen briefly gains after one BOJ member indicates rates may rise faster than expected. The Bank of England is expected to hold rates at their highest levels in 16 years, but will the central bank signal when it will start lowering borrowing costs? We will preview today's decision. Plus, US President Joe Biden says he would halt additional shipments of offensive weapons to Israel if the country proceeds with a ground invasion of Rafah. Let's check in on these markets then. Markets that seem to be looking for direction, for a catalyst. US markets essentially ending flat yesterday, weighed down by the stories from Alphabet and Tesla. Losses for both of those mega cap tech stories yesterday. The earnings story, of course, remains in focus. The rate story switches from the Riksbank of yesterday to the BOE of today. And, of course, continuing to tie together the messaging from the FOMC members and those within the Fed suggesting that higher for longer is where we should be on rates. European futures currently unchanged. US futures pointing to gains of, let's say, down a tenth of 0%. The FTSE 100 is looking to gains of close to 0.2%. The S&P is looking to losses of about a tenth. The Nasdaq futures looking to lose potentially 35 points, down 0.2%. Again, it was the mega cap tech names that disappointed in the session yesterday. Let's flip the board and look cross-asset then. The focus, of course, on the pound today. If we get a dovish sense in terms of the rhetoric that comes through from Andrew Bailey and team, and if there's a shift on the MPC, of course, that could impact the pound. So we watch that. We watch gilts at the open at 8 a.m. UK time as well, of course. Brent trading at $83 a barrel, close to 84 now, up 0.4%. A little bit of strength coming through for oil in the session today. Iron ore in focus as well. Some big changes. One of the major cities, population of about 16 million in China, Hangzhou, getting rid of all of its curbs and restrictions around property purchases, leading to expectations that that could happen across the country and maybe more demand for iron ore. So getting a lift there. We'll check in on the UK miners as well, listed, of course, on the FTSE 100 at the open, 8 a.m. But iron ore is getting a lift in the session. The 10-year, 450, yields up 1 basis point. Yields moved higher by about 3 basis points on the benchmark yesterday. That $42 billion auction was not particularly well received by these markets. Let's cross over now to Asia. Avril Hong standing by in Singapore. Avril, what are you looking at?
We're looking at China, we're looking at Japan, Tom. On a day where Asia stock benchmarks are mostly well into negative territory, we're seeing CSI 300 the standout performer. And this gain that we're seeing is following on from the trade numbers out of the Asian giant. The exports returned to growth, as you said, and was better than expected. But I think the import numbers are also really worth highlighting, because this gives us a sense that maybe the demand is really coming back in China, as the gain was much more than markets had anticipated. So CSI 300 well in the green, but it was already trading in positive territory. Well, Nikkei also in the green today. Let's flip the board and take a closer look at the why, because Hong Kong stocks were already running ahead. Key to this, what we're seeing in the Chinese tech names as they continue their advance. There is that earnings optimism ahead of next week. Some of the big tech names will report. Today we got the likes of Meituan getting their price target upgraded by Citi. And more importantly, as you alluded to earlier, is what we're seeing out of the Chinese property sector. The top tier city, Hangzhou, scrapping all its home buying curbs. And the idea here that tier 2 cities could soon follow suit. This would be a really big development. You're seeing the gauge of Chinese developers in Hong Kong really extending the gains as well. Let's flip the board, because I wanted to talk you through what we're seeing out of Japan, as we got some comments from the BOJ official Ueda sounding hawkish, talking about rate hikes on the day where the BOJ summary of opinions was dropped. Similarly, there were discussions about rate hikes, but it looks like the currency traders don't really believe the hawkish sentiment that's coming through from these Japanese officials, because after all, don't forget, the outcome from the April meeting was a dovish one. That being said, the June meeting does look like a live one. Let's flip the board, because I think where more of a reaction to those Japanese official comments is coming from is in the JGB space. The Japanese bonds really coming under pressure today. But this is also mirroring what we're seeing in Australia Australia, New Zealand, globally, indeed. On the 10-year, we're seeing those moves of about 7 basis points as well. Tom.
OK, Avra Hong with the deep dive on the Asian markets. Joining us now from Singapore, thank you very much indeed. We'll stay on the bond space as well and the Asian reaction that we're seeing across the markets today after, of course, a bit of pressure that came through on treasuries yesterday, a bit of a sell-off. Attention turning today to that 30-year auction in the US. Ahead of that, Fed Bank of Boston President Susan Collins warning that rates will likely stay higher for longer.
There's a significant amount of uncertainty around that outlook, and the recent data lead me to believe that it's just going to take longer than previously thought.
OK, let's bring in Bloomberg's MLive strategist Mark Cranfield for the details and reaction to what we've been seeing in terms of the Fed speak, but also the reaction to these auctions. Mark, how is the Fed speak likely to be tied to the auction today? The 30-year auction today, the 10-year was yesterday, not particularly well received. How are we set up for today?
I think traders would have liked to have a little bit more of a dovish outlook from the Fed speakers overnight because it's a tough job. The 30-year on the back of a not particularly good 10-year. 30 is always more difficult anyway. And you can see that yields are backing up here in Asia today. It's not just because of the Fed speakers talking about this higher for longer, which is not helping bond traders very much. Also, as Avery was saying, the Japanese market is under pressure, and that's significant because if JGB yields are heading higher, probably towards the 1% area, that will have a global impact. And we're seeing that throughout Australia and New Zealand and now filtering back into Treasury. Treasury is unusually soft in Asia on the day of an auction. You usually don't see much trading at all, but they are. Yields are up a couple of basis points in the Treasury curve, even before London comes in to start trading. So you can see people are pretty nervous about it. And as the Fed speakers were saying there, they're not going to give you any carrots in terms of early rate cuts. So that doesn't really help people going into the auction later today when they're still sitting on 10-year bonds, which are now underwater. There's been no improvement in price since the auction yesterday, and that's pretty unusual. Normally, even on a tough auction, you see the secondary market come in to support it. That is not happening. There's been further selling. So we go into the 30-year auction today really with the market on the back foot. Not ideal conditions at all for people to take on a big chunk of long-term bonds.
OK, that's really interesting. Or it could be a challenging day then when it comes to this auction for 30 years. What is your best assessment right now, Mark, in terms of the outlook near term for Treasuries?
It's all about the CPI report next week. If you dial back to the previous two reports in April and in March, both times it kicked off a big rise in yields, and we still haven't recovered since then. So if you look at what's happened, the pattern, just focusing on the 10-year yield in Treasuries, for example, we had two big blips in the past couple of months. They happened both at the CPI reports that were delivered in the two previous numbers. So if we get another hot CPI next week, it is going to be very challenging for the bond market. So you can understand why people want to be a bit defensive going into such an important number. And not just from the bond market point of view. Of course, the last report in April was the one that triggered dollar yen going through 152 and on the way to 160. So it matters across asset classes. Dollar traders, bond traders, everybody is fixated on what happens with the CPI report. Even if it's a benign report, that's just one. The Fed needs several benign reports in a row to be talking about rate cuts. But whatever way you cut it, next week's CPI is huge, and all the bond traders know that.
OK, the cross-asset implications of that inflation print out of the US and just how significant it will be, being set up beautifully once again by MLive strategist Mark Cranfield with a deep dive there also on these auctions coming through. And it could be a challenging day, as he said, for the 30-year auction later today. Mark, thank you. To the Bank of England now, where the central bank here is expected to keep interest rates on hold at 5.25% today. Governor Andrew Bailey may give a stronger signal on when the central bank can lower borrowing costs from their current 16-year high. For a preview, let's bring in Bloomberg's UK correspondent, Lizzie Burton, who is standing outside the BOE for us. Lizzie, what clues then could we get from Bailey and team about when monetary easing might start here in the UK?
Well, Tom, I doubt that anyone expects the Bank of England to be as generous in its clarity as the Riksbank yesterday and tell us just how many cuts to expect this year. Some even doubt whether they'd even change the guidance to say that the cuts are coming in the coming months. But maybe Andrew Bailey follows Christine Lagarde's lead and tells us which data points to watch. before the cuts come as a bit of a hint, wink, wink, nudge, nudge, if they're coming in June or in August. I'm also going to be watching the vote split, whether you have the Deputy Governor Dave Ramsden joining Swati Dhingra in voting to cut today. A recent speech suggests he's had a bit of a dovish tilt. And I'm also going to watch, Tom, the forecast, because if they lower the inflation forecast below the 2% target in the years to come, it would suggest they're wagging their finger at the market curve on which that forecast is predicated. But your question, Tom, is the question that's going to dominate the press conference today. When are the cuts coming after they start? And if they don't come in June, if they wait for August, it's going to be incredibly difficult for the Bank of England when you've already got the Chancellor Jeremy Hunt saying that rate cuts would be a feel-good factor for voters. And it's going to be even harder, Tom, if inflation gets back to target over the summer before they start to cut.
How should we be thinking about the potential market reaction then, Lizzie?
Well, markets are currently pricing in the headache I just described, a wait till August. They only see about a 40% chance of a cut in June. But if we get any dovish hints today from the forecast, the vote split, the press conference, then you might see bond traders changing their bets, piling on for cuts in June. And actually then you would see a weaker pound potentially and a boost to gilts. But Tom, there's been a lot of speculation about weakness in European currencies because of a divergence opening up between the European path for rates and the Fed's path for rates, and then that currency weakness feeding back into European inflation. Let me put it to you that in the case of the Bank of England, perhaps that's a red herring, because for the Bank of England, what matters is euro sterling, not the pound against the dollar. Most of our trade is with Europe despite Brexit. And actually, if you've had Andrew Bailey saying that the UK inflation story is more like the euro area inflation story, perhaps you'll see the Bank of England following the ECB path more closely than the Fed, and therefore less weakness against the euro, the dollar not mattering too much.
OK, Bloomberg's UK correspondent Lizzie Burden outside the Bank of England, of course, with a set-up ahead of that decision. And Lizzie will be across this story with all the detail for us through today. Thank you. Now, the Bank of England's decision, of course, coming at 12 p.m. London time. Bloomberg TV viewers in the UK will see special coverage of that and the press conference. It will also be streamed on our YouTube page at Markets. And later today, we're going to bring you an interview with the BOE Governor, Andrew Bailey. From central banks to individual banks now, and the story around potential consolidation in Spain. This is a story that's been evolving over the last couple of weeks. BBVA now, and this is the red head, the breaking news around this. BBVA now launching an all-share offer for Sabadell. We know there's been some back and forth between these two banks. The offer had come through from BBVA. They had said they wouldn't be able to upgrade it yesterday for Sabadell. Now we're coming through with the headline, BBVA launching an all-share offer for its Spanish counterpart. Says the equivalent cash price in Sabadell offer is €2.12 per share. BBVA offering one new BBVA share per each 4.83 Sabadell share. So one share, BBVA share, for 4.83 of the equivalent of Sabadell shares. BBVA to offer one share for every 483 shares of Sabadell. Again, this is an all-share offer coming through from Sabadell. So we'll see, of course, what the response will be from Sabadell on the back of this news, and be watching the stock price of both of those companies at the open, 8 a.m. UK time, very closely indeed. This is a story we'll keep across for you. Potential consolidation in the Spanish banking space. Coming up later in the programme, is the AI hype overblown? We put that question to the Google DeepMind CEO in an exclusive conversation.
AI is overhyped in the short term and probably underestimated over the long term, like what it's going to bring. And I think that's probably true of a lot of breakthrough technologies.
More from that conversation later this hour. Plus, UK self-driving startup Wayve secures backing from Nvidia, Microsoft and SoftBank in a £1 billion funding round. I'm going to speak to Alex Kendall, Wayve's co-founder and CEO. That's at 6:30 this morning. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, President Biden says he will halt additional shipments of offensive weapons to Israel if it goes ahead with a ground invasion of Rafah. He said the potential loss of civilian life is, quote, just wrong.
I made it clear that if they go into Rafah, they haven't gone into Rafah yet. If they go into Rafah, I'm not supplying the weapons that have been used historically to deal with Rafah, to deal with the cities, to deal with that problem. We're going to continue to make sure Israel is secure in terms of Iron Dome and their ability to respond to attacks like came out of the Middle East recently.
OK, for more on this, I'm joined by Bloomberg's Dana Kraish in Dubai. Dana, what does the US president's comment then, the statement, pretty forceful, what does it mean in terms of US support for Israel during the war? Is this a pivot moment in terms of that support?
It is very rare, unusual for the U.S. to actually pause any shipments to Israel, and that hasn't happened. It hasn't happened since the October war on Gaza. This is the U.S. for the first time in this war using its leverage against Israel and pausing this shipment. We saw yesterday confirmation of that, and we also saw the U.S. later saying it would review and may review near-term agreements for weapons if Israel goes ahead with a full offensive on Rafah. Now, they chose specific arms, which is this 2,000-pound bomb that has been criticized by humanitarian agencies for its use in the Gaza war, saying that it causes too much collateral damage. Now, on the ground, this might not impact Israel's ability to launch the offensive, but it's a very strong signal, strong warning by the U.S. to its most closest ally to say, listen to us, don't go into Rafah.
Dana, what is the latest in terms of the developments on the ground in Rafah?
So we saw yesterday Israel taking over the Rafah border crossing from the Gaza side, which also borders Egypt. And this is what prompted a lot of UN agencies to say this is very dangerous because Gaza is already in famine. And they were warning of fuel shortages. We saw pictures out of Gaza where people were moving to the Mawasi area where Israel says has access to humanitarian aid. And we also saw people setting up their own makeshift tents in Khan Yunis among the ruins in Gaza. So the situation still is very dire in terms of humanitarian aid coming in, despite the fact that Israel said it reopened the Kerem Shalom and more aid is coming in. But yet again, this is also the U.S. saying, or this is again the U.S. and UN agencies saying Israel needs to do more to allow more humanitarian aid to come into Gaza.
OK, Dana Kraish on the latest in terms of the Middle East and, of course, those significant comments coming through from the US president. Thank you for the latest out of Dubai. Other stories making the news today, and Russia has ramped up its attacks on Ukraine's energy infrastructure, hitting facilities across the country with a barrage of missiles and drones. The nation's largest power producer, DTEK, says 3 of its thermal power plants were targeted. It's the 5th time its sites have been attacked in a month and a half. Electricity will be rationed for businesses during the evening due to those strikes. There is plenty more coming up, including the latest in terms of Xi's visit to Eastern Europe, currently in Hungary. More details on that. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, China's President Xi Jinping has made the final stop of his 5-day European tour, arriving in Hungary overnight to a warm welcome from an EU member state that's gone all in on economic links with the world's #2 economy. Let's bring in Bloomberg's Budapest bureau chief, Zoltan Shimon, for the latest on the consequences, the implications of this visit. Why then did the Chinese president choose Hungary for the last leg of his trip to Europe?
Well, as you mentioned, while others have been sort of more critical, especially in the West, when it comes to the trade relationship with China. Hungary's Prime Minister Viktor Orban has gone really all in and has things to show for it, actually. There have been major Chinese investments, especially in the electronic vehicle, the EV industry. We're talking battery plants. Recently, BYD, the Chinese EV powerhouse car maker, announced it's setting up its first plant in Hungary. So those are all the reasons why Hungary is embracing China. And for President Xi, Hungary is an EU country. And for him, as he's trying to right-track the EU trade relationship, he's pointing to Hungary, saying this is what that relationship could look like.
Really interesting. Zoltan, what are you going to be watching for, you and the team, in terms of building out this economic relationship between Hungary and China in the next 12 to 24 hours? Are we expecting more deals to be signed, and will they be of consequence?
We shall see on whether they'll be of consequence. Prime Minister Orban for sure hopes they will be. More than a dozen agreements are expected to be signed. Hungary is the only participant in the EU of the Chinese global infrastructure project, the Belt and Road Initiative. Currently, there's the Belgrade-Budapest rail line that's being built, and Hungary is looking to actually expand its participation there, trying to bring in more rail modernization projects, energy projects, and very importantly, Hungary's budget is cash-strapped, so it's looking to lock in Chinese financing for many of these investments.
OK, Zoltan Shimon, thank you very much indeed. Our bureau chief in Budapest, monitoring the last leg then of President Xi Jinping's tour to Europe, ending it, of course, in Hungary. And we watch to see if any further deals come through. And, of course, the need and the demand is there, certainly from the Hungarian side, as Zoltan was outlining for us. Let's check in on how Asian markets are faring, because, of course, we have seen this sell-off in bonds. We saw the sell-off in treasuries, and that's rippled across the Asian markets as well. That issuance yesterday by the US Treasury, $42 billion, not well received by the markets. You have an issuance of 30-year today. 10 years were yesterday, 30-year today. And Mark Cranfield from our MLive team saying it could very well be a challenging day again in terms of that issuance. And it's having an impact on the yields, of course, of Asian bonds as well. Yields up, selling off, of course, broadly. Across the equities space, you're flat across the benchmark. A little bit more optimism when it comes to the trade picture of China. The data suggesting that maybe there's a bit more sentiment there. Exports as a pillar of that economy seems to be holding up. The Nikkei over in Japan currently flat at 38,193. The CSI 300, though, mainland index in China, 3,660, adding 0.8%. And there's been some developments as well in terms of the real estate market in the city of Hangzhou, population 13 million. We're seeing iron ore rising on the back of that development. Coming up, we are going to be speaking to the co-founder and the CEO of UK self-driving startup Wayve. Really interesting company, recently raising £1 billion, aroundabouts, in funding from the likes of Nvidia, Microsoft and SoftBank. You may have heard of them. Massive backers then from this UK startup in the autonomous driving space. And, of course, we bring you that exclusive interview as well with the Google DeepMind CEO, Demis Hassabis, on the future of AI and particularly AI-developed pharmaceuticals. That conversation next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian bonds fall, extending the selling pressure seen in treasuries. After a sale of 10-year notes was met with tepid demand, China's exports, meanwhile, returning to growth in April, while the yen briefly gains after one BOJ member indicates rates may rise faster than expected. The Bank of England expected to hold rates at their highest levels in 16 years. But will the central bank signal when it will start lowering borrowing costs? We preview today's decision. And shares in chip designer ARM tumble on a lukewarm revenue forecast. Meanwhile, in an exclusive interview, the Google DeepMind CEO tells me about his hopes for a major AI breakthrough.
So we're already working on real drug programs, and I would be expecting maybe in the next couple of years the first AI sort of designed drugs in the clinic.
OK, we'll bring you more of that interview in the next minute or so. But let's check in on these markets then. Markets that seem to be searching, grasping for a catalyst. We heard further Fed speak, reiterating this higher for longer regime. The inflation print out next week we know is going to be really consequential. And then the auction of the 10-year treasuries yesterday, not particularly well received by the markets. The 30-year auction later today. European futures currently pointing a little lower, down 0.1%. The FTSE 100 with the eye, of course, on that BOE decision, pointing to gains of about 0.1%. But it's the commodity story, arguably, that's going to be more important for the FTSE 100 today on the upside that's coming through from iron ore. And you can tie that to the China story. S&P futures currently off by 0.1% after a soggy session yesterday, frankly, and some losses coming through from the likes of Tesla and Alphabet weighing on US markets. Nasdaq futures pointing to losses of 0.2%. Let's flip the board and look cross-asset then. We keep an eye, of course, on the pound. The yen has been in focus as well. More rhetoric coming through from officials in Japan around that currency, trying to jawbone it stronger. To what effect, though, longer term? 124 on the pound right now, closing in on 125. We'll see the movements if there's much volatility. Again, if we get a dovish BOE. The US 10-year right now at 4.50 after yields moved 3 basis points high yesterday, $83.90, closing in on 84 on Brent, up 0.4%. Iron ore, there's the pop for that key commodity, of course, up 2%, close to 2% in the session. And again, the feed through to the miners later on the FTSE 100, it will be important. To the tech story, though, shares in ARM Holdings, of course, tumbling in late trading after the firm, based here in the UK, listed in the US, gave a lukewarm sales forecast for the fiscal year. The chip designer sees sales of $3.8 to $4.1 billion for the period, with analysts predicting sales of just over $4 billion. The forecast raises concerns the tech industry's AI spending spree might be slowing. And later, ARM's CEO, Rene Haas, will speak to my colleagues Ed Ludlow and Caroline Hyde in the US. You can catch that interview on Bloomberg Technology, 4 p.m. UK time. Staying with AI, and we bring you now an exclusive interview. Google DeepMind has released a new version of its AlphaFold tool for biological research. CEO and co-founder Demis Hassabis told me that AI-designed drugs may be ready for testing in, quote, the next couple of years.
Of course, biology is, as we know, is a dynamic system. Really, all the emergent properties of biology and life are due to interactions between different molecules and different structures. So that's what AlphaFold 3 is about, is a first step in that direction, understanding this dynamic picture and understanding what proteins interact with and how they interact with those other types of molecules. So not just other proteins, but also DNA and RNA, like you said.
And for the medical world, and in terms of drug discovery, how significant do you think this could be in the months and years ahead?
Well, of course, the holy grail for drug discovery is not just knowing the protein structure, which is what AlphaFold 2 did, but actually designing drug compounds called ligands that bind to the protein surface. And you want to know where it binds and how strongly it binds in order for you to design the right kind of drug compound. So AlphaFold 3 is a big step in that direction of predicting protein ligand binding and how that interaction will work.
Given the technology you now have at your fingertips and everything you know about how this is progressing, what is your best guess as to what will be the first AI-derived and discovered drug?
Yeah. Well, we announced earlier on this year some big partnerships with Eli Lilly and Novartis. So we're already working on real drug programs. And I would be expecting maybe in the next couple of years the first AI sort of designed drugs in the clinic.
That's really interesting. In the next couple of years. Isomorphic Labs, look, I know this is a passion of yours. You oversee this unit. It's a separate business, but under the Alphabet family, of course. And it's that generative AI or AI-developed drugs. And you have those partnerships, as you say, Novartis, I should say, and Eli Lilly. Up to $3 billion of revenue. Does AlphaFold 3 get you closer to unlocking that revenue with those commercial partners?
Yeah, it's a critical part of the tools that we have at Isomorphic. We also have some other AI systems that fill out this space of drug discovery. There's a lot of different techniques and modules that are needed in order to cover the whole of that a very difficult process. AlphaFold 2 and the protein structure was just one small component of that. And you can think of Isomorphic building many tools that fill that out, moving more into things like biochemistry and chemistry so that we can design the right drug compounds.
Are you under pressure when it comes to Isomorphic Labs to commercialize these products? What is the potential revenue stream of that unit?
Well, I think first and foremost, I think it's the most beneficial thing. If you ask me the number one thing AI can do for humanity, it would be to solve, hundreds of terrible diseases. I can't imagine a better use case for AI. So that's partly the motivation, behind isomorphic and AlphaFold and all the work we do in science is to advance society and benefit society in these big ways. But I also think that if you could revolutionize drug discovery process, make it 10x faster and more efficient and more likely to pass through the clinical trials because you can predict the properties better, that has to also be enormously of an enormous commercial value too. So I hope to do both with isomorphic, build a multi, $100 billion business. I think it has that potential as well as be incredibly beneficial for society and humanity.
Okay, that's CEO and co-founder Demis Hassabis speaking exclusively to us. Of course, the co-founder and CEO of Google DeepMind. All things AI within Alphabet now report up to Demis, so a really consequential figure. Also in the AI space, a UK company reaping the benefits of investor appetite for all things AI. Chipmaker Nvidia joining a £1 billion funding round for self-driving startup Wayve. The fundraise, one of the largest ever for an AI company in Europe, has been led by SoftBank with existing investor Microsoft. We know Bill Gates is a fan, putting in further funds as well. Founded in 2017, Wayve wants automakers to install its technology into their vehicles rather than own or operate the cars itself. I'm joined now by Alex Kendall, co-founder and CEO of Wayve. And when UK politicians talk about the UK being at the forefront of technology, companies like Wayve certainly come to mind. It's a massive raise, Alex, so congratulations on that fund. Presumably it gives you a lot of runway, and I'll ask you maybe about the timeframes on that. In terms of the deployment of this capital, Alex, around this really fascinating company, does it go on the compute? You build out your own models. We know how intensive that is in terms of cost, the build out of compute, the needs for those chips, the infrastructure. How much of the funding goes towards the infrastructure? How much towards the build out of the business, the hiring of talent?
This round is super exciting for us as a team because it gives us the capital to go and invest further in these spaces. It's really all about taking the technology we've been building for 7 years now and being able to turn it into a product for the automotive industry. So we're going to be investing further and increasing the data and compute to be able to train AI. I mean, the scale of ambition we have here, I think, goes beyond what we've seen from large language models today. Being able to train an AI that we can trust to physically interact with us in the world. And of course, turning it into a product, building the robust safety architectures to make this a winning and trusted solution in the automotive market.
And trust is really important. And there's a differentiation between what you guys do and some of the other competitors out there because your model is based, your system is based on this AI model. So it takes in the inputs from its outside environment, feeds it back into the model, the inputs as well from the driver, those who are behind the wheel. Very different from some of the other prospects out there. How wide is the moat now that you have versus your competitors?
Well, it's been a different approach for the last 7 years, one that's been contrarian to the rest of the industry.
Yeah.
The AV 1.0, the first generation of these technologies, built cars or built systems that would largely follow or work within constrained areas following a high-definition map that told them how to operate. What we've built is an embodied AI system, and I really want to extend the conversation in AI from chatbots and co-pilots and search engines to things like AlphaFold that we just heard about, or embodied AI, bringing AI into the physical world. That's really the big opportunity that we have here. We've been pioneering this technology here out of London and now with our team around the world to come up with some of the ideas that can allow it to be robust and trusted in the physical world and ultimately now start operating in the automotive industry.
And I mean, you were contrarian and famously Musk as well, and he changed his view. You had a conversation with him at one point and he challenged you on your view on this. People are coming around to this system that you're putting in place, including, it seems, Elon Musk as well. So in terms of that moat that you have, are you feeling that competitive pressure now, Alex?
Well, ultimately, we want to be deploying the pressure is a privilege. We're excited to be building it out here, but ultimately we want to build an AI that can be a platform across the whole automotive industry. And I guess what I'd say is I think the safest and most performant system is going to be trained with the data and experience from the largest diversity of experience from all of the automotive brands. And we really want to see experience across the industry and provide that solution to brands themselves.
You've been testing the system here in the UK since 2018. Give us the time frame. When do we expect to see these cars deployed on the roads?
It's coming. We're not going to give a specific time frame because we don't want to add to the hype of the industry. I really want to make sure we can be heads down and focused and build this. But I mean, just yesterday, I was on a demo drive through central London. We can, our system can drive with hands off, where you have no interaction with the controls of the car, drive through all of the complexities of central London around Trafalgar Square, Big Ben, all of these kind of sites. And of course, you know the complexity we have on the road here with cyclists, buses cutting in and out, taxis. That's the kind of environment it operates in.
There's a brand image problem, isn't there, around autonomous driving? And you're at the kind of centre of trying to change that. That's fair to say. There have been a number of accidents from some of your competitors using different systems. How much of a challenge is that? You're having to change the branding around autonomous driving. The promises have been significant. We haven't matched them. But you're part of trying to reset that?
I think the benefits are enormous, and I think the world is aligned around those. Of course, improving road safety, freeing up time, improving the sustainability of transportation. So we're all aligned on that.
How do you convince people that these are safe systems?
It's by setting the right expectations, and I think the model we're taking about getting the system deployed as driver assistance first, so being able to improve the active safety of your driving, being able to reduce the stress and while you still monitor the system, is the right way to get started to earn trust. And then, of course, the experience of deploying in millions of vehicles will allow us to grow the system quickly from driver assistance to full autonomy. I think that's a better model than starting immediately with robo-taxis in an unproven way. So we want to grow the technology, earn trust, and work with regulators.
Alex, how much runway does this funding give you? An IPO has to be in the back of your mind. I know you're going to say we're heads down and working on the product right now. We're not focused on the IPO, but it's there, Alex. I know it's there. Give us some sense as to the listing plans for this business and whether it could ever happen in the UK.
Well, this funding it funds our entire business plan, which is, it's a real delight as an entrepreneur to have that, and it lets us go and build out this technology.
Are we talking 12 months?
We need to get the product shipped first, and so that's what we're focused on right now. Yeah. So you're right, we are heads down. When we earn the right to have a conversation around an IPO, we'll have that.
When that conversation comes, it's not going to be the UK, is it? Frankly.
I'm not going to wade into that conversation right now.
Okay.
We're pretty focused on what we're doing.
In terms of the data, who owns it? Is it the driver? Is it your customers? Is it you?
We have commercial arrangements to use a wide variety of data. One of the interesting things is we can train our system, of course, on the driving experience from the autonomous vehicles we work with or the automotive manufacturers we partner with. Also, internet-scale data, dashcam data. This is the amazing thing about AI right now, is that it's becoming multimodal and able to bring together sources of data across the board to ensure we can build the most intelligent system with the general purpose reasoning to deal with the long tail of edge cases you see on the road.
What is the potential top-line market value of this particular sector, Alex?
I mean, you can read some management consulting quotes that it's in the trillions, and I really believe that. I think
you think this is a potentially $1 trillion market.
Embodied AI it's the next wave of tooling. You know, we've had calculators, computers, actually having machines that are intelligent, that you can trust, that you can delegate tasks to, and can help support your life. I mean, this is just bringing enormous potential. Autonomous driving will be the first example of this, because there exists the data, the vehicles, the business model to get going. But we're going to see a whole wealth of different intelligent machines that will really support our lives. And embodied AI is what makes this possible.
OK, Alex Kendall, thank you very much indeed. A really fascinating company, really fascinating story as well. Generated, of course, here in the UK. We continue to monitor that for you on this massive fundraise that's come through and how it sets the company up. Alex Kendall, the co-founder and CEO of Wayve. Let's check back in on the latest lines coming through in the banking space of Spain, of course, because we know there was this all-share offer. It dropped to, 44 minutes or so or go, right at the top of the show. BBVA then seeing Sabadell deal to be EPS accretive after 1 year. So EPS accretive after 1 year. BBVA seeing a 0.85 billion synergy story over 3 years in the Sabadell deal. In terms of the lines that crossed then, I'll just bring you the top lines that crossed at the start. Around 6:12 UK time, BBVA launching that all-share offer for Sabadell. Of course, we're waiting for the Sabadell response to this. There's been some to and fro between the two companies. This could be the first significant consolidation in Spain and Spanish banking space that we've seen in a while. Again, they do see this Sabadell deal. BBVA sees this Sabadell deal potentially EPS accretive after just 1 year. And the synergies they're looking at is 0.85 billion euros over a 3-year period. We continue to monitor this story for you, of course, throughout the next few hours. Coming up, the Bank of England decides, will today's announcement be the last hold before a cut. We're to discuss that with Chatham Financial's Jackie Bowie. What to watch for then from the statement and what we hear from the BOE governor as well, because, of course, we will be sitting down with him. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, markets are expecting the BOE to keep borrowing costs at their highest level in 16 years when it announces its policy decision today. But, of course, the language and the statement will be in focus. Maybe a dovish tilt. Jackie Bowie, managing partner and head of EMEA at Chatham Financial, joins us now for the details in terms of setting us up with a great preview. Jackie, what is the expectation from you? What are you going to be zeroed in on when it comes to the statement, when it comes to what we hear from Bailey? Do you expect that dovish tilt?
Yes, well, if we look back to the last Bank of England meeting, it was a vote 8-1 for the hold, so only one vote for a cut. So there's definitely more expectation that we might get one or even two members of the MPC voting for a cut this time. Really important to point out that only a few meetings ago we had a three-way split in the MPC, with some still actually voting for a rate increase. So there really has been quite a big shift towards the hold and the cut. So looking at the vote, and then secondly, looking at what the revised forecasts are for growth and inflation. Bailey's been very clear that they're very data dependent. They're not going to cut interest rates until inflation is firmly heading towards the target. So looking at revisions for growth, UK GDP is slightly stronger in Q1. So he's maybe got some new information to help make that decision today.
Jackie, as things stand, of course, they could change that. What is your view in terms of when they cut and what the sequencing will likely look like?
Yeah, so it still looks like the first cut could come in June. But, I mean, we've got to just remember how much this market has shifted from the end of last year across all central banks, where the market was pricing in very significant rate cuts across all markets. And what's happened is, of course, the extent of the cut is being reduced and the timing getting pushed out. But it definitely feels like there's one coming. It could be June or it could be just after the summer. Obviously, we've seen some of the peripheral European markets already start to cut interest rates with Swiss and then Sweden yesterday.
Yeah, do those moves from the SNB and the Riksbank give cover to some extent to the BOE to diverge as well from the Fed?
Yeah, and there's been a story all year that the Fed was going to lead the rate cuts and then, the other markets would follow. And I think we're absolutely firmly in this position now where those markets will move interest rates according to their own situations. I think the cut in Sweden yesterday was interesting, but the case for rate cuts is very strong there because the economy is very weak and inflation is actually in better shape than it is in the rest of Europe. So a very clear direction, like domestically, that rate cut was the right thing to do. So not looking to be led by the Fed at all.
On the inflation story, Jackie, what could derail the progress that's been made in UK inflation? What are the risks to the inflation story for the UK?
So generally, it's obviously the inflation story came around because of external factors, energy crisis. We don't need to repeat all of that. But the reason it stayed sticky is because it became very much embedded, particularly in the UK, in our wage inflation. And then embedded through the services sector. So we need to see that inflation start to come out of services and wages. What will derail it, I suspect, would be another external shock. So given everything that's going on geopolitically, you're watching very closely what's happening there and hence what the impact will be on the energy markets. So, hard to predict what that is. But generally, when the MPC announced today, paid really close attention to when they expect inflation to get to that 2% target, because I think we might see a slight improvement in the timing for that.
OK, really interesting. The focus on the inflation forecast from the BOE, setting us up really nicely with a detailed preview there. Jackie Bowie, managing partner and head of EMEA at Chatham Financial. Thank you very much. Now, the Bank of England's decision comes at 12 p.m. London time. Bloomberg TV viewers, of course, in the UK will see special coverage of that and the press conference. And later today, we will bring you an interview with the BOE Governor, Andrew Bailey. Stay with us, plenty more coming up. This is Bloomberg. Welcome back. Happy Thursday. Let's take you through some of the big tech stories that evolved overnight in the US. Reddit, its first earnings since that IPO, and it did not disappoint. Revenue jumping almost 50%, a 16% pop in the share price in terms of the session. The gains coming through then for Reddit, its advertising sales doing really well as well. Very different story. Let's split the board and have a look at Intel because, of course, there are these additional restrictions coming through from the Biden administration in terms of the sale of chips to Huawei. But more consequential, arguably, was the forecast. It was slightly softer in terms of the second quarter for Intel, and that led to some downside for that stock. ARM, let's flip the board again. UK-based, US-listed. And again, is this the canary in the coal mine in terms of a little bit of softness, a little bit of cooling in terms of the expense and spending around AI? Maybe we'll get some more detail from the CEO of that company later when we speak to him. But there was pressure on that stock after the forecast disappointed investors. It fell around 9%. Of course, this is the company that provides the blueprints and the licensing for the chips that go into, 90% of the world's smartphones, increasingly trying to pivot towards that AI story. Later, we will be speaking to ARM's CEO, Rene Haas. He's going to be talking to my colleagues Ed Ludlow and Caroline Hyde. That is part of our special coverage at the Bloomberg Technology Summit, 4 p.m. UK time, so tune in for that. Up next, though, more of a deep dive in these markets. A big day, of course, for the BOE. We'll be working through some of the earnings stories and getting you up to speed on the potential acquisition story in Spain and, of course, the geopolitics of the Middle East. That's Markets Today coming up. This is Bloomberg.